The wealth redemption team didn't work over the weekend, hoping for a call in. They've been told to expect to work weekends for a while, though. Meanwhile, U.S. banks are looking to invest in Iraq. The governor of Iraq's central bank, Ali al-Awlaq, met with Steve Lutz, vice president of the American Chamber of Commerce, to discuss the banking and economic relationships between Iraq and the U.S. They also touched on the interest U.S. companies and banks have in investing in Iraq. Al-Awlaq reassured that the Central Bank of Iraq would offer the necessary support to facilitate these investments. Now, let's talk about something important. How we manage our money can completely change the game. Imagine you have two ways to invest. One is like floating on a calm lake, and the other is like jumping into a crowded basket with everyone else. Which would you choose? In this video, we'll explore why I prefer the floating option, and why this choice could impact not just your returns, but your peace of mind too. Let's break it down. First, the basket method. When you put your investments in a basket, you're committing to a set value. Think of it like a mutual fund or a fixed plan. There's a clear return, usually in a 1-to-1 ratio. You know what you'll gain, but the downside is you don't have control over how your money performs. Once it's in, and your return may not keep up with inflation or unexpected costs. Now, let's talk about the floating option. With floating, you have the freedom to move your money around. You can diversify your investments, whether that's in stocks, bonds, or even cryptocurrencies. This gives you the chance to chase higher returns, not just the base rate. For example, if you float in the currency market, instead of being locked into a fixed exchange rate, you can pick currencies with returns that exceed a 1-to-1 ratio, potentially even $3 or more. If you're stuck in the basket, you might miss those opportunities. Floating also allows you to stay agile, reacting to market changes quickly. You can sell underperforming assets and reinvest into high-potential opportunities. This creates a cycle of growth rather than stagnation. But it's not just about returns. Let's talk about peace of mind. Having control over your investments empowers you. You're not just sitting and waiting, you're actively managing and optimizing. The basket method is more like the saying, you can lead a horse to water, but you can't make it drink. Once your funds are in, you can't do much except hope. Many financial terms can overwhelm people, but the key here is that floating gives you options. You can capitalize on opportunities when they arise, rather than waiting for a predetermined outcome. Nobody wants their money to sit idle when it could be working harder for them. You might be asking, how do I start floating? It's a great question. Start by researching where to place your money, stocks, ETFs, or a mix of assets. Look for platforms that allow you to trade freely and track your investments in real time. You want tools that let you make decisions quickly without the hassle. Next, build a balanced portfolio. This ensures you manage risk while floating. When one investment isn't doing well, others can help balance the load. Finally, keep an eye on the markets and adjust your strategy as things change. The markets are always evolving, so staying informed is crucial to maximizing your profits. Now, let's shift gears. President Trump recently announced that Iraq can only use the US dollar for medical purposes. You can use it to buy medicine and medical equipment, but that's the only exception. Citizens are now restricted from using dollars for everyday transactions. Businesses can't use them either, and even the Iraqi stock exchange is prohibited from using the dollar. So, what does this mean for the people of Iraq? This mandate limits their ability to conduct transactions in one of the world's most powerful currencies. Let's break down the impact. Imagine going to the store and realizing you can't use dollars for purchases. Instead, you have to use the local currency. This complicates things for those who are used to dealing in dollars. Many Iraqi businesses rely on international suppliers who prefer payments in dollars. Without access to the dollar, this could cause supply chain disruptions and increase costs. Without the dollar, the local stock market could face a reduction in investment opportunities. The flow of money that would typically enter the market may be rerouted or lost entirely. While it's still possible to get dollars for international travel, how does this affect those who want to travel for leisure or education? Limited access to dollars could prevent citizens from visiting family or studying abroad. Now, how will the Iraqi government respond to this mandate? It may be tough for them to reassure citizens, leading to frustration and confusion. And what does this mean for US-Iraq relations? The limited use of the dollar could create hesitation among American companies to invest in Iraq. What about potential benefits? Could this mandate push Iraq to strengthen its local economy by relying less on the dollar? While focusing on the local currency might boost financial independence, this shift won't happen overnight. We also need to consider the historical context. Iraq has relied heavily on the US dollar for years. Suddenly cutting that access creates uncertainty. How do Iraqi citizens feel about this mandate? Are they concerned, angry, or indifferent? Hearing from them could provide real insights into how this will affect daily life. Finally, what happens if the Iraqi government can't find a solution soon? We might see inflation rise or even a black market for dollars. Social media and news outlets will likely play a big role in shaping public opinion. Could this push the government to reverse the decision? It's an evolving situation worth keeping an eye on. So, what do you think? Are you ready to stop settling for the predictable, stagnant return of a basket investment, and start floating toward higher possibilities? Let me know your thoughts in the comments below. Economic expert Dr. Safwan Qureshi explained the mechanism for ending the financial conflict between Baghdad and Erbil, pointing out the importance of linking revenue outlets to the federal government and organizing them with financial accounts linked to Baghdad. Qureshi told Al-Maluma, "There is an urgent need for the Ministry of Finance to prepare general federal collection accounts within the borders of the region for all revenues, especially oil revenues and those related to border crossings and other revenues, so that they can be linked to the treasury of the Ministry of Finance." He added, if the federal government has the ability to finance all allocations, there should be priorities, as the region suffers from not being included in investment projects, as investment spending within the region's borders has not been included in the budget. He explained that, the inclusion of these projects requires the region to prepare a budget that is approved by the parliament in Kurdistan and merged with the federal budget so that there is transparency in the investment financing process in the area of Iraq, especially since there is an urgent need to find clear financial relations that end the financial and technical conflict between the federal government and the regional government, by unifying authority over border crossings, customs and investment projects and linking them to the federal government.